if you want to help people, like if you want people globally to have a better quality of life, like economic growth is the engine that delivered that. And if you can bring in a technology that just makes that very complicated, intricate machinery work even just a few percentage points better, that's massive.
Welcome to the ATX DAO Podcast, the hub for exploring the forefront of blockchain technology in Austin's Web3 community. We connect you with innovators within ATX DAO and beyond as we venture into the world of decentralized technology. So crack open a beer and join us for a front row seat to learn about the innovations and trends shaping our digital future. This is the ATX DAO Podcast. Well, welcome to the ATX DAO Podcast. Today, we're very excited to have Stephen Lubka with us. Stephen, welcome to the show, man. Glad to have you with us.
Yeah, pleasure to be here, guys. It's great I'm excited to have this chat, and it's been cool learning a little bit about what you guys have been doing.
Yeah, absolutely. So definitely really interested in kind of some of the stuff that you've been doing as well. And usually we like to start it off with just getting a little bit about your background. How did you get into crypto, and kind of take us through the journey? Because it's always very unique for every one of us. So I want to kind of hear about your story.
Absolutely. Yeah. So I got in kind of early 2017, and I was running a business with a business partner at the time. And I called a friend actually for his birthday that I hadn't talked to since college. And it was his birthday. I gave him a call and we were catching up. He's like, "What have you been doing? This and that, the business." I was trying to do, some investing at the time and kind of managing some cash that was on the balance sheet and those sort of things. He said, "Oh, you got to check out crypto. You got to check out Bitcoin." And I was like, "Isn't that a scam? Like, is that real? Like, come on, man." And he's like, "No, you got to look into it." And I was like, "Okay." And, I went online and I started kind of reading about it. And it was, I think like Bitcoin was still under $1,000. Like, I wish I had just gone absolutely all in then. I didn't, but I started reading about it then, and it was interesting. I was compelled by it. I put a little bit in, and at that time, it basically just went straight up for the next 9-10 months. I mean, it just went from 1,000 to 20K, and so that's a confidence builder. You know what I mean? Like, you feel pretty smart. And but I just got obsessed. I just got completely, captivated by the whole thing. And, about a year and a half later, we were winding down that business. And I thought, well, you know what? Like, I want to try to work in this industry. I don't really know how I'm going to do that. I don't really know what, and that was like 2018. So A, it was in the middle of a bear market. B, everything was so much earlier. There were not that many professional opportunities. There was not that much going on compared to now. But I thought, I want to take a crack at it, and I did that. And I mean, it worked out. I, definitely held a few roles and worked as a consultant. I, worked as a consultant for high net worth investors, helped people that were navigating the space, some smaller VC firms. And then during COVID in 2020, I met Corey, who's the CEO of Swan, and some of the other kind of early employees at Swan Bitcoin. And it was during like the Clubhouse kind of moment where everyone was in lockdown, and suddenly this new app becomes very popular. It's Clubhouse. It's audio only. Bitcoin, I remember Bitcoin got over 10K for the first time in like 3 years, basically, minus the like Libra pump when Facebook had that stable coin. And it's heading up, and I was euphoric. I was running a software development agency at that time. It was some kind of Bitcoin facing stuff, but mostly just general mobile dev, web dev. And I was euphoric. Like, it was over 10K. And I remember coming to the office to be like, "We are so back. Like, we are so back." And no one really paid attention then. But, maybe a month or two later, it's at 20K. It's doubled. And, people started paying attention. But I'm also like, I'm on Clubhouse. Like, I'm like crazy about this thing. And so we're hosting these rooms, and we are kind of just educating, answering questions. There's a ton of new people coming in. A, everyone's bored. They're locked down in their home. There's this new app. B, the price is running up. And it was this perfect storm of just like so much interest. And, I just did that for a while, and then Corey reached out to me and said, "Hey, do you want to come join Swan?" And my goal was like I had done, like I said, some development and some working on a few projects here or there in terms of what I was doing at that time. But my goal was to just be full time, in the Bitcoin world. That's what I wanted for a number of years. So I joined Swan to set up and run the private wealth team. And so you're at this moment in time at this kind of juncture where there wasn't really like a huge high net worth segment prior to 2020. So, you have kind of obviously a little bit of a, kind of a euphoric period in 2017. And there's a bunch of people just getting in. I think that was the most retail heavy cycle we've ever seen. And it wasn't a lot of like high net worth investors, obviously some, but I don't think it was a major theme. And basically in late 2020, early 21, you start to see these people come out of the woodwork. And so for the first time, there are these kind of wealthier people, generally, somewhat a little bit older people compared to the 2017 cohort that, just they're taking their first Bitcoin position. They want mid 6 figures, 7 figures, 8 figures, whatever it is. Like these are these larger purchases, and they're just kind of coming in and wanting to execute that. So we start to see that. And so Corey brought me on to lead this team. My thesis was that what these sorts of clients are used to and what they're not going to be able to get at Coinbase or Kraken or wherever is they're used to the Morgan Stanley model, the Goldman model. They're used to picking up the phone and calling someone that not only can help them, can take care of the account, answer questions, but also, can broker a transaction over the phone that minimizes what they needed to do. And that kind of was the model that I brought in for Swan Private, and we've done for the last 4 years. And it's been, hugely successful. Clients love it. All of our private clients get a dedicated account advisor, text, phone call, however they want to execute. So it's a little more old school in terms of the brokerage model. And it's been very successful at connecting with, maybe you have kind of maybe the tech native cohort, and they're fine. They're going to set up their 2-factor authorization and their wallet. They're going to do it all themselves. And actually they like doing it all themselves because it's new and it's interesting. But there's so many other people in the market that do not want that experience. And it's been great just kind of building towards that. And yeah, it's been been doing that ever since.
Yeah, absolutely. And I think you make a really good point. I think a lot of people don't think about that. Like dealing with high net worth clients, like they don't do a whole lot of other things. Like people will write checks for them at a certain level. So giving that kind of service level, I think is huge there. But one of the things that kind of made me think about when you were talking about your start is that I think we all have that period of time where we heard about crypto or Bitcoin and didn't really take advantage of it at that point. I remember mine. I think it was 2010. A buddy of mine, I was at his house for a barbecue, and we go up to his study, and there's all these computers in there that are running all these GPUs, and he's mining Bitcoin up there. And I just thought it was the silliest thing ever. And I'm sure he spent it all, but he probably would have hundreds and hundreds of thousands of dollars worth of Bitcoin then. So just kind of funny that we all have that moment of we didn't believe it, and then something happens, and now we realize what we should have done years ago.
There's a learning curve. It's not like I almost never do I talk to somebody that's just like, yeah, heard about it, bought double-digit percentage of my net worth the next day.
Right.
Like it just doesn't. It's not common, and you look back and you wish you had, you wish you went all in or bought bigger when you did, but nevertheless, that's the process. And I think there's still so much ahead of us.
Yeah, absolutely. Or not spending it. Like that's the other thing that I always I can't ever bring myself to spend any of it. Or I did. So I was actually going to school recently for a master's in blockchain, and they took payment in Bitcoin. You get a discount if you paid in Bitcoin. And I bought most of that Bitcoin during the bear. And if I try not to think about if I just bought and held it, what it would be worth now. Because it's just like, I never want to spend it because there's always going to be some future time where it's like, it's going to be like the pizza day all over again. So that part's always rough.
Yeah, I'll get calls sometimes from like business owners, people that own some sort of retail business, and they ask about, like, accepting payment in Bitcoin or these sorts of things. And I'll always say, if it's something that'll be like fun for you to work on and do, that's great. Like, set it up. But I think the number one thing to be aware of right now is, like, it's not super rational to spend it at this stage. Like, you don't spend the form of money that might be up, 10x in a year or whatever it is, right? Like, you spend the dollars. And so, do we get there at some point where it's more of that medium of exchange role? Probably, yeah. But I think the rational move is like what you said. It's, you still just want to hold this thing as it's rapidly monetizing.
Yep, 100%.
It's kind of funny. I distinctly remember being on a business trip in Dubai and playing pool with a homie. And I saw this article. Like, it was like, I think this is like 2014, 2015 or whatever. And like Bitcoin hits like maybe 2015, 2016 or something like that. And it hits like an all-time high. And I'm playing pool and I see this thing and I'm like, holy shit, man, maybe I should just like go balls deep into this thing. And literally my buddy, I still remember, he's like, after I have that thought and I say it out loud, he's like, dude, I'm going to go grab some more beers. You want some? I'm like, yeah. And that thought just left my mind. And I'm like, oh my God, you're an idiot. Like, it's kind of funny how like these thunderbolt moments in life around like great epiphanies and great regrets almost occur the exact same way. They come out of nowhere and there's some kind of catalyst that just spins it in, and you got to be in that moment to be ready to capture it. Like, if not, that moment's already passed. But it is wild. At least I don't have to be burdened by the problem of being like, oh, I bought early, now I don't want to spend it. I don't have that problem. So,
The most expensive beer you've ever had.
Exactly. That's a very high six-figure number that I should have basically been like, bro, I should have gotten balls deep into it. But it is kind of wild. I got to ask also, like, this white glove bespoke service of like what traditional private wealth would be, and then you bringing it to this new asset. I guess that was very purposefully done, right? Considering your previous experience, you're like, dude, these HWIs and like wealthy individuals, like, they hit a certain point, they're expecting this kind of level of service. We need to do this. Yeah. But there's been a lot of people that are obviously coming along and trying to replicate that same model. My question is that what do you do to make sure that you have separation between the two?
Separation between which two?
Yeah, sorry about that. Separation between other firms that want to replicate the same model, right? Yeah, other private wealth firms that are there.
Absolutely. So it's an interesting thing because when you look at it, it's not a market that's easy for the exchanges to enter into, right? Because it's one thing to do it for Bitcoin, which has been, labeled clearly not a security. What does that mean? It means you don't need regulated financial advisors to have those conversations. But you go over to a Coinbase or a Kraken, and you need a legal opinion across every single asset on that platform because your people will be talking about those assets. They'll be like brokers and they'll be officially representing them. And so I think it's just, that's difficult to get across legal. That's difficult to get across those motions at the exchanges. So that's kind of one segment. I don't anticipate them moving into this model. It's complicated for them. And then you have the more traditional financial firms. And the thing with them is, like, they don't touch the actual asset. Maybe they recommend the ETF now, but they can't actually sell the coins to their clients. And so it's a different thing that obviously you're going to have some uptake of that in the registered investment advisor segment. These people are going to be recommending it. But you'd think like there'd be a lot of momentum there after, the most successful ETF of all time launch of all time happens, you have, BlackRock with 28 billion just in the BlackRock one as of something like today. And yet, I've talked with people at Morgan Stanley, I've talked with people at the wirehouses and the wealth shops. They still can't solicit. So if you're an advisor at Morgan Stanley, you cannot pick up the phone and call your client and say, hey, I really think you should consider buying some spot Bitcoin ETF. You can only give it to them if they come to you and it's in the right kind of an account. It's in a brokerage account, not an advisory account. My point in saying that is just to say that they've been very slow on the draw despite the success of the ETFs, and there's so much more to go. And then even once they get there, we're still talking about only the ETFs and not the spot asset. And so this is an interesting thing because I was watching all of the numbers like incredibly closely after the ETF launch because, okay, they finally get approval. These ETFs are coming in market. And, we sell Bitcoin and we sell Bitcoin IRAs and we have this whole company, this whole product, this whole service. And, I'm a little nervous, like anyone else would be, is like, whoa, are these ETFs going to siphon all the demand? Are we going to see like a drop off? You know what I mean? Are people just going to be like, this is too hard, especially our segment, the people we work with, and they're just going to buy the ETF? And surprisingly enough, Corey would have predicted this ahead of time, but surprisingly enough, in some ways, we actually see everything go up substantially. Our volumes, demand goes up. And I think the way to think of it, the model that kind of we view it through is prior to the ETFs, the spot market had basically 100% of the market. It's like, unless you were doing like a weird futures contract or something, like if you wanted to buy Bitcoin, you had to buy Bitcoin and it was the actual coins. Whether you held them on an exchange or in your wallet, it was still the actual coins. And so it was 100% of the market. The ETFs launch, I don't know what it is now. Maybe it's 50% of the market, 60, 70, I don't know. But right, you lose like a material percentage of all money coming in is now going to those products. However, the total amount of dollars and the total amount of people just got 10x larger. So you went from having the whole market to only having half of it, but the market's 10x bigger. So you actually just got 5x larger, right? Even though your competitor just took half the market, because them coming in widened that top of funnel so much that what we saw is just more clients, more IRAs, more everything, in the aftermath of that. And the reason I share that to your question, which you just asked me, was that surprisingly enough, like the success of these spot products ultimately just ends up creating this pathway where more people learn about the asset itself, and they actually want to hold that bearer asset. They want to have the coin themselves, even if it's just to have the option to do something with it in the future. And I actually think that's financially rational. Like a lot of Bitcoiners will obviously highlight like confiscation risks and government risk and these sort of things. And that's true, right? This is a bearer asset. It's something you can own that can't be taken from you. But even outside of that perspective, I think it is financially optimal to own the coins themselves, because any kind of opportunities, any way to generate a return from that asset, which is available today or ever becomes available in the future or over the next 10 years, you'll really only be able to participate in if you own the asset itself, not the ETF shares. And even today, I mean, I know some people that like the authorized participants for the ETFs that ensure the share price stays, within a basis point or two from the spot price. These firms, and we're talking about like JP Morgan, we're talking about huge, big name Wall Street firms, they have to borrow thousands of Bitcoin every day overnight. And I know people that are lending those Bitcoin to them. And yeah, it's 3 or 4% maybe. It's not Terra Luna. It's not a 21% yield every year or whatever, but it's 3 to 4%. And your counterparty is JP Morgan, which has an infinite balance sheet and will be backstopped by the US government if they blow up, right? So it's like insanely high quality counterparty. And So if you have those actual coins, you can generate X percentage, and if you don't, actually you're paying BlackRock 25 basis points and you're getting none of that. And I think that only gets bigger over time. Like the more Bitcoin succeeds at being this kind of like collateral, this like prime collateral in the financial world, I think the cost of capital, that kind of opportunity cost, only goes up, not down.
That's super insightful. So it seems like your vision is that obviously any kind of other derivatized or financialized product, no matter what kind of instrument or creation, and whoever's shilling it and selling it, right, is basically like a synthetic like mirror, like shade of a mirror to the actual asset, which makes sense, right? Everyone wants underlying asset exposure. And you're saying that because of that, right now, one of the things you can do is just, you can earn that yield. You can collect that spread, right? Which is smart. And you want to double down on that. Like the fact that that itself is there and the regulatory environment doesn't allow for these to happen seems to be like, dude, this is our nation. We can grow this business a great deal, right?
Yeah.
That's pretty interesting. I never thought about it that way, but then when you explained it, it is kind of insightful.
And something else there, I think, to just further pull on that thread a little bit, the financial firms, I know, so we've run this business for a while. We know what is involved with facing, I use retail broadly here just to mean individuals and not institutions. Facing people at scale, it's not a simple thing of just like turning that on, right? Because you have Bitcoin, which is a bearer asset, right? The moment the Bitcoin is withdrawn, it's gone. There's no bank you can call to reverse it. There's no credit card fraud department. But fiat is reversible. So you send a reversible asset in and you withdraw a bearer asset out. That opens you up to tremendous fraud risk, because anybody that can get dollars in, buy the Bitcoin, get the Bitcoin out, and then in some way reverse the transaction, whether it's an ACH reversal or it's something else, or they're manipulating something, someone else's money, and they've moved it in, right? And so these big firms, they do not want to deal with that, and they are not prepared to deal with that. It is a completely different ball game for them. They're very skilled at, the fiat world where they have tremendous control. And if you try to do reversal fraud with Goldman, like you're screwed, buddy. You're not going to get away with that, for the most part. And this is like a completely different ball game. And actually, like the companies like mine are so far ahead of these people that it's not close. They're not going to enter the spot market in that way. Maybe, they'll buy a custodian and they'll have a custody deal or something, or, they'll do something, I'm sure. But I think we're a very long way away from them actually facing retail individuals directly and dealing with like actual on-chain withdrawals and actual on-chain assets. And so you're in a position where just like the companies that are Bitcoin native and the companies that are really have it in their DNA, this world, they really have a 5-year head start on these businesses. They're not close.
That's something for me to like really ruminate on, because like I feel like that's a special superpower that's coming around this idea of financializing this asset. And it seems like all the suits, we're all ex-suits once upon a time, right? Yeah. Like, and they're all coming in now. I guess that, my next question, like Luke was very curious about the IRA question. I'm sure you want to jump into that, but yeah, let's go to that before I, talk about the other kind of like elephant in the room about ordinals and all that stuff. But before we get into that, because I'm pretty sure that'll be an interesting topic as well.
Yeah, but definitely do want to hear about just the IRA side of things. I think that's one of the things that's really cool that y'all are doing, is offering that as and it's different than other cases, because you're mentioning like ETFs. So there's other folks out there that'll do an ETF as part of your IRA, but y'all's is different. It's the folks are actually holding the coin. But can you talk just a little bit about kind of how that's been received with folks in general, and kind of what led to kind of building that out there?
Yeah, absolutely. So it's probably been our fastest growing product launch over the last 2, 3 years. Huge demand for it. An interesting fact is like when you look at the American wealth distribution, for the average person, let's call it the bottom 90% of wealth, a huge percentage of that wealth is in retirement accounts in terms, at least in liquid wealth. Obviously, like real estate, like people have value in their homes, but in terms of like investable liquid assets, um, IRAs are huge. Like that is where most IRA, 401k, etc. So much money in there, and these people often have a problem where these plans are managed. So if you're with a company and you contribute to the 401k plan, like generally what's happening is your plan is being managed by a third party 401k provider. And there's been a kind of race to the bottom with these guys in terms of volatility, meaning these firms are so scared of getting sued for essentially like the only protection they have is if they can point to other providers and say, look, they did the same thing. I bought the S&P 500, they bought the S&P 500. Like I bought this mutual fund, they bought this mutual fund. It's effectively normative and such you can't sue me. But what has happened, the kind of legal precedent in this industry is that if one of these 401k providers is like, you know what, all in Google, Amazon, Microsoft, Meta, right? They would have done fucking great. Let's be clear. That would have outperformed everybody else. It would have been simple. It would have been relatively low risk compared to so many things. These giant tech companies, and they would have got the shit suit out of them because it's like not normative. It's not what everyone else is doing. The volatility would be higher. Someone wants to come tap their 401k. It's down 15% that year. It was a bad year. It fell more than the index. And it's like, you fucked up workers' retirements and you're screwed. And so what you've seen is this really crippling incentive where these plans are so scared to take any sort of risk and have any sort of volatility that they're returning like 3% a year. They're returning like 4% a year. They're underperforming inflation. They're completely failing at any sort of reasonable interpretation of their mandate, which is that they want to grow this value for people that save into the plans. And the vast majority of Americans don't even understand anything about this. They don't know that a 4% return isn't good. They're not thinking about a hurdle rate over inflation. They're not thinking about any of this. And so people have a lot of money trapped in what are essentially toxic instruments, toxic vehicles. And so people that are a little more educated and thinking about this, when they realize this, they want to get the money out. And so they need to get it into a vehicle that they can basically administer themselves, that they can control. And, that's part of the story. But anyway, so we brought this product in that allows people to take existing retirement assets or new contributions. But, the bigger story was you have existing assets in a plan. That's an IRA, a Roth IRA, SEP IRA, 401k, whatever it is. You roll it over, whatever portion you want to buy Bitcoin with. You buy Bitcoin. It's a standard, regulated, it's held by a trust company, qualified custodian, completely, by the books. And what you actually own is spot Bitcoin. It is actual coins. Now, you can't withdraw it without triggering a taxable event, right? So because that's going to be a distribution. So in practice, it's with a custodian. However, whenever you're ready to pull money out of that, you pull it out on chain. You pull it out directly. You send it to a wallet. You own those assets. And that's just not something you get with the spot ETF. They're non-redeemable. You cannot get actual coins out of those products. And there's been so much interest in that. And it's not the easiest thing to find, especially at a reasonable price, right? There are some firms that did this maybe a couple years ago. They had Bitcoin IRAs and crypto IRAs. A lot of them are charging 2% a year to do it. They really extracted a pound of flesh. So these were very costly products. Ours is 25 basis points, a quarter of 1%. And so we brought one of these products to market, brought it down to the cost of an ETF. So it's just as cheap as one of these ETFs. And it's been incredibly well received.
Yeah, no, that's awesome. So are you seeing a lot more folks like with the new money? Obviously, if it's a 401k, you're going to roll it into something traditional or self-directed, that kind of thing. But if it's new money, are you seeing a lot more folks put into like a Roth type option? Just because, I mean, if you're expecting Bitcoin to do what you're expecting it to do, like the tax hit now is better than the tax hit later. But are you seeing a lot of folks taking that path or?
Yeah, new contributions, definitely a large amount of that goes to Roth where possible, because I think it's if you make over 160K a year, you can't. So, there is that kind of factor for, kind of our upper end clients. But for people that qualify, yeah, a lot of Roth contributions. And that is the way to do it. Like if you're gonna, I mean, whatever your best assets are, you want to own those in the Roth. You pick your highest volatility, highest return assets, you put them in the Roth. And that is always going to be the optimal move.
I'm curious to see what do you feel about this? It feels like for a while, crypto was our thing. It's kind of like, I don't know, in a weird way, I was kind of like, I was watching this interview of Lefty Rothstein, right? Who's the guy who actually Robert De Niro is like portraying in the infamous movie Casino, right?
Okay.
And it used to be like, the casinos at that time used to be their thing. It used to be like, hey, it's like we're making money, everyone's making money, but it used to be our thing, right? Like it used to be run by certain people. And now it feels like that cabal shift has been shifted a little bit. That is, banks have been their thing. And crypto was our thing. We all were part of that life. We left and we decided to get out and do this. Transparency, ownership of your assets, thinking about a different kind of financial system that can be built out, various kinds of instrumentation for these products. But now it feels like they've all come back in. I'm curious to see, we obviously have adopted a lot of these methodologies in terms of instruments, services, and products. But I'm also wondering, is there a little part of you that also says like, hey, JP Morgan, Morgan Stanley, BlackRock, Amazon all coming in and owning also the value chain, right? Like much like Swan mining. You guys are trying to own that integration pipeline, right? Like, so you have the financial services, you own the mining sector. The next obvious play is like when you guys do a Series C, you'll buy a fucking SMR. Like that's obvious. You'll be like, I want infinite energy to power my mining. Like this is there. Like, but I wonder, is the overgrowing presence of the suits in the financial system coming back into these asset classes like something that we look at and say, oh, this was an asset at one point that was totally non-correlated to these other economic risks. And how do you feel about that? You kind of have to straddle these worlds a little bit more than we do.
It's a great question, man. It really is. I'm going to hit that from a couple different perspectives. So yeah, it's changed a lot. I mean, even just as, back in 2017, which is when I got involved, it was, like I said, it was just much more of it was just people. It was this kind of edgier, not as well known, not institutionalized asset that, in fact, a lot of the value and the story there was effectively an alternative, right, to these systems, to these parties, which have later come into it. And yeah, it's changed a lot. That sort of epoch, that sort of time frame is gone in many ways. There's some areas where that's more present, but also those areas have generally been underperformers. Let's be clear. I remember privacy coins and Monero, and I remember XYZ, right? The mixers recently got, Tornado Cash and the Bitcoin versions of that. Those devs got arrested. Those devs got threatened, right? So yeah, there's those pockets, but it's been a rough time. It's been a rough time to be in those pockets. And so it's changed for sure. And, in part, it's like, I think one can, be disappointed about that in certain ways. But the flip side of that is, in my opinion, this was always going to happen, right? Like, that's what mass adoption is. Mass adoption, you don't have a new financial system or a new money that isn't used by the financial system, right? Like if it's going to actually succeed, if you're going to actually win, it's inevitable that there will be ETFs. It's inevitable that banks will touch this in some capacity. There's no, like, the only reason they wouldn't is because you didn't win. So this was never like a path. This was never something that I think wasn't going to happen, except unless you failed, like unless it just totally failed. And so part of it is it's inevitable and you just have to navigate it. Now, the belief had to be, and the hope, and a belief I still hold, is that the properties effectively of the base layer are properly designed and robust enough that even if traditional financial system gets 30% of the coins, across all owners, hundreds of millions of people, but let's say even they get 30% of the coins or something like that, the structure of the network needs to be such that, like, it's still net positive, right? It's still better to be in a world which has that versus doesn't have that. Is it going to be the world where every single human being on the planet owns their own Bitcoin in self-custody and everyone transacts on chain? Like, no, it's not going to be that. But is what it will be better than what the alternative would have been? I believe yes, and it's not even close. And I think there's a lot of paths for Bitcoin. I think it's there's not just like one way this goes. And some of the ways this could go, like, do not include like a medium of exchange component where it's like being used for payments. Like, there are scenarios where Bitcoin kind of just functions as a smoke alarm. It kind of just trades and functions as a form of value, a store of value, and a form of collateral that, like, keeps governments in check to a certain degree, where if there's too much money printing, it shows up in the price of Bitcoin and citizens effectively sell the currency and go into the Bitcoin. Because right now you're in a thing where, like, you can convert from a fiat to another fiat. You can buy, assets. People are limited in their ability to do that. But the thing about the fiats trading together is they're all inflating. So you're really just looking at the pace of inflation relative to the other one. Once you have this asset Bitcoin that is not only not inflating, it's not being printed, it's not being issued by a government, but it's also liquid, it's tradable, it's movable, unlike gold, which is, very cumbersome. It suddenly starts to show the real rate of the combined total of monetary policy, fiscal policy, government spending. And in my hope, like, even as a base case, that functions as a check and balance for government. And so that's a positive outcome to me. That's probably, like, I think the most reasonable base case likely outcome of, like, it's not a daily transactional currency for billions of people, but it does this one thing really well. And then there's a tail on this where, well, maybe it does crack medium of exchange. Maybe it does do these other things. And I'm not saying it will or will not. I just think, like, you start from the most probable case, and then, we kind of go out on the curve there. And I still see value in that, like, Bitcoin mostly functioning just as an asset. To me, that's still a much better world. And I actually think it also has, like, meaningful global national economic improvements, because on a fundamental level, like, money is a technology that we use to coordinate economy, right? Like, we've got 300 plus million people in America, all engaging in this decentralized economic activity that is the economy. There's no government managing it. There's no top-down economies are. It's just people going out in the world, doing things, creating value, trading. And price is kind of like the medium that information is translated towards. It gives you information. When you go to the store and you look at the price of a banana, you might not know why that price is up or down, and there's a caveat here, but like that price represents like the sum total of market forces up until that moment where you buy the banana. However, where the noise comes in is, let's say the government couldn't print currency, or it was a fixed issuance rate, or it was verifiable or something like that even. In a world where they can't print currency, if you see the price of bananas shoot up 10%, you may not be able to know what happened, but you know for a fact that a real world economic outcome happened. Some banana farms burnt down, there was a drought, the shipping companies failed, or there's been so much demand for bananas, everyone wants some, right? Something real happened. However, in the current paradigm, you don't know if it's just currency inflation or real world economic outcomes. And scaling across hundreds of millions of people, millions of businesses, trillions of transactions, that noise, that data insecurity, that uncertainty, I think drags down the totality of economic output. It gets inefficient. Even if we're only talking about a 5% drag, that is like life-changing. If you could make the economy as a whole 5% more productive, you have reduced human suffering on a massive scale. And so like, that's a little bit of a like abstract answer for some people. I'm sure you guys get it. Some people, it's like, why is he excited by this? But like, if you want to help people, like if you want people globally to have a better quality of life, like economic growth is the engine that delivered that. And if you can bring in a technology that just makes that very complicated, intricate machinery work even just a few percentage points better, that's massive. Like that's massive. Not to mention that you might have an issue with the selective way that government spends money.
That's a very good, very nice way and polite way of saying that we have idiots running the balance sheet, basically. But I gotta say, so it seems like your philosophy is to look at Bitcoin as a network that birthed a very strong asset that is a check to a lot of these forces that you put in, right?
Yes.
Not a network where we want compute to occur, right?
Correct. That like my primary view of Bitcoin is as it produced an incredibly unique asset that has crucial functions, and the network serves to have a certain variety of characteristics that let that asset function in the way it needs to. I'm not saying I'm opposed to Bitcoin as a compute network, Bitcoin as an application layer, but that is not the primary way I think of it. That's like cherry on top, that it's not its primary function. And that's, I think, like the big difference between Bitcoin and crypto, at least from my perspective, is it is not an application story. It's not even really a use case story. The thing you see is the story, and everything else is like optimized to give that the qualities it has. And like you said, you ask about, and there are ordinals and there are this like increasing level of programmability, and that is changing. And so you will see some of that. But my view is, even if all of that never succeeded, it totally failed, it never delivered any value, that base thing is what gives Bitcoin longevity and a future.
100% agree. I just wonder, you see, I think one of the unique superpowers is being both ADD and myopic, right? Having the ability to have peripherals and zone in is what makes for a unique kind of predator, right? And like a business in that way can see many different things, but if you need to do a few things really, really well, right?
Yes.
So a core competency and focus around a singular chain and asset makes a lot of sense, right?
Yeah.
Like I'm pretty sure while the juice is theoretically worth the squeeze, you guys have done the math, and it's like, bro, we could get in on this ETF action, the IRA action, but like you said earlier, it's like that's out of our purview. There's other problems. We can be really good at this one thing. I wonder if in a near future, I wonder if assets that are based on various ordinal standards or meta protocol standards could be part of the Swann's portfolio. Could be the things that you guys actually end up giving to some of your clients. Maybe it's a distant future, but it is a future considering if network actually occurs there, and ownership and self-custody and those principles around natural rarity and thinking about, hey, this is a scarce environment. Is this something that could occur?
So if that's something that the community and the Bitcoin community, right? Like, let's say we look forward a few years in the future. I mean, it's not something, I see, in this next year or the immediate time horizon, but like, let's say in a few years, whatever use cases emerge, whatever it is, things, get created, new functions get created, and the Bitcoin community and Bitcoiners like start to value this. Like, yeah, we're of course open to that. Like our focus is on Bitcoin. It's like you said, like we have a core competency. And I think that's been smart for us. I think also an interesting case study there is topical. MicroStrategy just flipped Coinbase on a market cap basis. MicroStrategy does one thing. They buy Bitcoin, they put it on the balance sheet, and they've come up with very clever ways to do that are sophisticated. Like it's like the debt issuance is a fascinating thing. They have issued bonds into the fixed income market that bond investors have bought that have outperformed Bitcoin. Like that's unheard of in bond world. So like they've done some interesting stuff. It's not just they stack sats. But MicroStrategy recently flipped Coinbase, and I think Coinbase is one of the examples of like they've spread themselves over so many different things, right? They started with Bitcoin, Ethereum, Litecoin, then Bitcoin Cash. But as the company has developed, like they have their own layer 2. They're doing have supported countless networks, all the layer 1s, stable coins with Circle, and like obviously like that Circle USDC line of business has been very good for them. I'm not saying these things have like not been successful at times, but I see it as like an example of like a company that has really taken that broad focus without a specific one. And the thing is like, in my opinion, it's a little embarrassing for Coinbase that a company that started buying Bitcoin in 21 owns more Bitcoin than Coinbase, the company. All they ever needed to do was like, they've been in market for a long time. If they had put a couple $1 million into Bitcoin and just held it, or hell, even Ethereum, like just they actually bought the thing that they're so in on and put it on the balance sheet, like it'd be a different story. But for some reason, they just refuse to really hold it. They've refused to really they even announced they're doing a stock buyback now, which is insane to me. Buy Bitcoin. Like that's what you're for. That's what people want to own your stock for. Buy it. Buy the asset. And it'll help that price of the asset. It'll help your business. But seeing MicroStrategy overtake Coinbase this week, I mean, it is a piece of evidence towards like they are laser focused on one thing and they want to own the actual asset. And Coinbase has done everything except own the actual asset. Obviously, if you were in the VC round or you invested in Coinbase, you did very well. I mean, it's worth fucking $40 billion. It's not like it hasn't been a success story. But my God, can you imagine if they just put $10 million into Bitcoin in 2015? Like, it's just a miss on their part.
I know MicroStrategy, I saw something where they're trying to raise $42 billion to buy a bunch of Bitcoin. It's wild. 42 billion.
Yeah. Like it's crazy. Wild. It is like literally like one of the biggest issuances in stock market history. Like it's not even like that's a big fucking number. They're basically saying we're gonna buy 2 times the Bitcoin that the BlackRock's ETF bought this entire year ourselves. It's wild, And
I don't know how that number really plays out, but I mean, the man has big balls and a big vision. That's one thing's for sure.
Yeah.
Like, because that is not a small number by any means.
No.
But like you said, you know, it takes a lot of like effort and a lot of like genius structuring around the products of like, you know,
Very
market
sophisticated.
equity kind of offerings, new at market equity offerings. I know I was just glancing at this, so like, oh, this is pretty fucking clever. And
No, it
yeah,
is.
they built this thing.
It's not just like, we buy Bitcoin. Like, it's much more sophisticated than that. I think he pulls it off, or at least directionally close. Like, I think they've done close to 10 billion already. So it's not, it's 4 times more than they've ever done, but they've been successful, and they have been very smart with that debt and the issuance. But I think they get somewhere close to it. What's interesting with that, though, there's an interesting kind of the market now has been told that there is a $42 billion buyer that has committed to buying it. And so you get this interesting kind of game theory on, let's say you're an institution or a financial advisor or whatever, and you've been kind of on the fence about buying Bitcoin. He kind of just put like a time pressure on it a little bit. And your incentive is to front run those flows. Like, your incentive, the whole market is now incentivized, like, man, like, maybe I should buy the Bitcoin before the $42 billion comes into the market. Like, it's not too complicated, so it'll be interesting.
And definitely he was like, bro, you got to do 2 things. If you were thinking about selling, God damn it, you're not fucking selling now, right? Because MicroStrategy is coming after that Bitcoin over that next 3 years. That's the first thing, right? So that's insane. The other thing is like you said, imagine all the wheeling and dealing required to put all the assets on your book. It's going to be insane.
Yes.
Like, it is just going to be wild, man. Yeah, I always wondered, like, my question, however, with MicroStrategy plays is like, why don't you just own the Bitcoin yourself, right? You're getting a proxy ownership of the Bitcoin. Sure. It goes back to what you're saying. You're like, one of the value props of Swan is that, like, hey, we have this ability to own the Bitcoin. One of the primary modals of an exchange is that theoretically they're supposed to show proof of reserves, but because of the way they're built and because of the fact that, we're all naturally designed to overreach, I'm sure they're not keeping exactly a 1-to-1 ratio of all these assets, right? I'm sure they have their own kind of regulatory requirements of what it is. But yeah, it is wild to think like this is happening. It is a crazy version of the simulation that we're all in right now.
Yeah. And no, definitely, I mean, it's no substitute to owning the asset itself. It's obviously been a very interesting story. It's been a successful story. I think you've got to own you've got to own spot asset. And I think Michael Saylor would say the same thing. But like the bond story is interesting, right? Like these fixed income investors can only buy fixed income. They don't have the option to do anything else. They're getting crushed. And so, for example, they want to buy the MicroStrategy debt. That 21 billion in debt, there's going to be a tremendous amount of demand for that because they're stuck. Like these are pensions, these are fixed income investors that have a mandate. They have to invest like this. And the bonds are returning 3%, 4%, 5%. It's trash. And so, it's not the same thing as spot Bitcoin, but again, the thing people I think often miss with the financial world is how limited, like, these parties are not free to do whatever they want. They have to act within certain confines. And that's where a lot of the genius plays out.
Yep, totally so. Hey, Stephen, one thing I picked up on that you said earlier that I want to kind of go back to. I noticed you refer to Bitcoin and crypto as 2 completely separate things. And so I want to kind of just have you kind of dive in a little bit more. Kind of how do you differentiate between the two, and like why is Bitcoin a separate thing?
Yeah. So obviously, like, you get there depending on your definition, right? Like, if your definition of crypto is like an asset that trades on a blockchain, then obviously, like, they're both crypto, right? I think where that kind of phrasing comes from is, in my opinion, and maybe some of the Ethereum people get mad at me for this, but like, Bitcoin's the only money. It's like it's trying to be money. It's very specific. It is not trying to be an application layer. It's not trying to have staking and restaking. It's not trying to distribute transaction fees to token holders. It's not a governance token. It doesn't give you a vote. It doesn't do any of this. It is money. And 100% of its value comes from monetary premium. I don't feel that there is anything else that has a legitimate claim to that in the crypto space. Like, obviously, like, okay, stable coins or whatever, but that's a different story. And, there were, you had Litecoin, you had like some of these other attempts. You could say Monero, you could say the privacy coins, like that is, I think, accurate, but obviously those are a tiny, tiny fragment of Bitcoin's market cap. And that is this thing that kind of makes Bitcoin somewhat unique. I would actually say very unique. And then you go over to crypto and you have this other kind of just garden of things, which, you have your layer ones, which are ultimately their primary claim to value is trying to say, look at the useful applications that we enable on top of this. We have created a very functional, we're trying to create this functional, unique properties application layer that people build on top of. And the more valuable applications we have on top of, the more value the layer one asset has. And then you obviously have like the applications that come on top of that, whatever, your Uniswaps, your DYDX, your whatever it is, NFTs, like those are all then have their own value proposition based on how useful those applications are or so on. And so like, I think like the taxonomy is a little different. They're obviously all kind of blockchain based. They're all these kind of types of assets that share a similar origin. But they're different in categories. And then, so why do we say Bitcoin and crypto? I'll be honest, like, part of it is just the collateral damage of like FTX and ICO bubble. And like, if you're in the Bitcoin space, it behooves you when you're talking to people, look, like you're trying to differentiate yourself. You're like, this isn't FTX, like this isn't an ICO, this isn't a like governance token. And like, you do want to kind of like carve that out because I think ultimately there's no like central party, right, that can issue it or has undue influence on it. Like Solana, for example, like you can say whatever you want about the level of decentralization, but the Solana Foundation not only issued the tokens into the market and derived, obviously revenue from doing so, but they still control the entire developmental roadmap. You know what I mean? And that doesn't mean like people haven't made money investing in Solana or that people haven't like, used it to do various things. But there is that pressure point. There is that like, you can press on them. Governments could, if they wanted to, I'm not saying they do, but if they wanted to put pressure on the Solana Development Foundation, like they could, and they could affect it. And and I think it's like highlighting that Bitcoin is relatively unique in that there just is nobody to sue. There's nobody to go after. There's nobody to put pressure on. Like it just doesn't have that. And I think it is, anyways, that's kind of how we think of it.
Yeah, no, that makes a lot of sense. I think part of what it is that I'm hearing as well is that the point of having Bitcoin is to have Bitcoin, whereas holding Ether or Solana or something like that, it's prepaid compute. Like the point is the compute that you're buying with it.
You're going to use it. You're going to do something with it.
Yeah, absolutely. Awesome. So I did have one other question for you, and I know we gotta wrap here in a bit, but just kind of interested in your thoughts on kind of where do you see Bitcoin going next? What do you see, for the next, let's say, foreseeable future in terms of what you expect with Bitcoin?
Yeah. So it's obviously Bitcoin had a great year. It started 2023. You had the spot ETF approvals we talked about, and it went from 27K to 69K or to 73K. So nice little performance. It then has consolidated. It has kind of gone sideways, basically in a pretty narrow band for Bitcoin in terms of volatility. So I think it's very primed to move higher. You had some pockets of selling during that. You had Germany selling 3 billion. You had the U.S. Marshals selling some of the Silk Road coins. You had the Mt. Gox distributions finally come back. So that sideways period was definitely exacerbated by those pockets of supply coming to market. But it's been moving up, and I think the fundamental environment is just incredibly constructive, right? You have central banks around the world cutting rates. You have China doing tremendous stimulus. You've got the stock market at all-time highs. You've got what I think is an economy that's in decent shape. There's obviously been a lot of debate on recessions and yada, 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 but I think it's hard to look at the data and not see an economy it's not in a recession, right? And so the monetary conditions are getting easier. The stimulus is coming. And you've had these tremendously you've got Larry Fink, the CEO of BlackRock, going out there on a regular basis and talking about how great Bitcoin is, right? Like there's new money coming in. There's new entrants. You've got MicroStrategy buying billions of dollars of Bitcoin. So the setup looks really good for me. I don't think the bull market started yet. I think we're at the cusp of it. I think 2025 is a very good year. And then there's some volatility around the election. And I think that's why we're not going anywhere material until after the election. Obviously, this isn't a political statement, but just in terms of market impact, the market would love a Trump victory, right? If Trump wins, I think Bitcoin soars. I think crypto soars. I think in some ways, even crypto maybe even does better in some of those ways because of the regulatory overhang that has been, I think, quite heavy on that side. And I think that gets significantly de-risked under a Trump presidency. So, you have a Trump win in, my God, 5 days? That's fucking crazy. Jesus. You have a Trump win. I think everything shoots up literally immediately. I think you get some big green candles and it runs and it closes the year maybe at 90 plus K. If you have Harris win, I think people are a little too afraid of that outcome. I think it's overblown. Do you get probably an immediate reflexive sell-off? Yeah, probably. You probably do. I think the market expects a Trump win, so it has to unwind that expectation. But at least speak on Bitcoin. I don't really watch the price of other stuff too much, but it doesn't go below 60K. It sells off a little bit. Maybe there's a wick, but I think by the end of the year, it's still close to 70K in the Harris state. There's a sell-off and then it goes back up. I think probably the only if you have a total blue sweep that maybe throws out the window, Senate, House, and presidency, I think that's very unlikely. I think you either get Trump or you get Harris with a relatively red Congress, and I think it's fine. And then I think it does very well into 2025. I just think you've had a lot of money that's been sidelined until after this election. So in some ways, just getting through it, having the outcome known, maybe it goes down, maybe we rock it. But at that point, capital allocators can come in and they can just take a position.
Yeah, absolutely. And it's funny how you were mentioning too about just the changing sentiment. And actually, Eric Voorhees tweeted out earlier today. It was two tweets from Donald Trump. One of them 5 years ago calling Bitcoin a scam, and the other one today celebrating the anniversary of the white paper, which was just kind of wild to see just how things have changed in that amount of time. So I think more and more people are definitely getting on board with the value of Bitcoin for sure.
I would love all future presidents of the United States to celebrate Bitcoin on its birthday.
Absolutely.
So you're saying that every one of them has to go to PubKey and have a beer? This is part of the campaign trail now?
I think so, man. I think we won our spot. He came to. I had a tweet when that happened that was this is a pilgrimage. He is coming to our sacred spot and participating in our rituals. This is going to see the Catholic Church, but it's for Bitcoiners.
Yeah, it is kind of interesting. I just gotta say, this was a dope conversation. Yeah, next time you're in Austin, man, definitely come through. We would love to do this again with beers. Podcast, no podcast, dude. This would be dope.
Awesome.
I'm really looking forward to it.
Would love to do it, guys. Thank you for having me on.
Yeah, absolutely. And Stephen, real quick before we go, so if folks want to follow you on socials, how do they get in touch with you, that kind of thing?
Yeah. Just search Stephen Lubka. I'll come up. My handle's a little more complicated. Type in my name, you'll see me. I'm on Twitter constantly. Love Twitter, man. And links to everything else is in there. Obviously, my company is Swan Bitcoin, just SWAN Bitcoin.com. And if we've got a ton of great stuff. If you want to get an IRA, if you want a good place to buy Bitcoin, take it to self-custody really easily, would love to, check it out or hop on a phone call, anything we can do to help.
Awesome. Thanks so much, Stephen. This has been great.
Thank you.
See you guys.
Thanks for tuning in to this episode of the ATX DAO Podcast. If you like what you heard, please rate, subscribe, and share the podcast with your friends and colleagues. To learn more about ATX DAO, visit us at atxdao.com and follow us on X, Farcaster, and LinkedIn at ATX DAO. Thanks again for listening, and we'll catch you in the next episode.